Hey everybody, Courtney Smith here with our August 8th edition of Wall Street Winners. A lot going on, but the price action is interesting to me. Let's take a look. Oh, wait a minute. Let's take a look at this first. All right. So we finally got the seasonal rally we were looking for. It took a little while. It's a little bit late, but nonetheless, it rallied up. But things are going to change now. This rally, I think, is running out of gas. Look at this purple predictor making lower lows. The purple predictor's in a bear market. This is on balance volume. It's in a bear market, even though prices are going up. When you see a divergence like this, follow the smart money. So when we get to seasonality, you'll see that seasonality says we should be going sideways. Well, this certainly tells us we're not going higher. So sideways, sure. Over here, let's take a look at the Dow. Notice that the buying pressure is slip sliding away. Now, selling pressure is not going up. And so you can see the price action is pretty stable. But buying pressure, is this all there is? The buying pressure, we only got to here. We couldn't even break the previous significant high. This is pretty weak price action. NASDAQ, though, I told you months ago. Well, 2 months ago, that we would see the NASDAQ outperform the Dow and the S&P. That's certainly the case. We did break out here over these highs, but we haven't done that in the S&P or the Dow, so it hasn't been confirmed. Smart money's still in the NASDAQ. Still, if we're going to be long, we want to be long NASDAQ-type stocks, not Dow-type stocks. Now, our seasonality indicator, remember, we're in a neutral period here, September 30th to April 30th. So we're neutral. Now here, this is very interesting. The Utes just crept above the previous high, which is my buy signal. So I'm putting it here as a tepid buy, okay? But if we can get it to close above this line, I'm going to start buying utility stocks because they're generally seasonally bullish until the end of October. So that's pretty good. Now, this is what I'm saying. We're using the yellow line because it's worked the best so far this year, and we're halfway through the year. And what it says is that we should be roughly neutral, but look out below because coming in a week or two, we should start seeing a more significant decline. So another leg down starting, let's call it third week in August. And gosh, we're almost in the second week, so there's not much left in this bull market before we start to get hammered. So we can't get too aggressive on the long side in those sexy NASDAQ stocks. I think what's going to happen is we're going to start to see the dividend, the old school, the ones that have done well during the bear market are going to become the ones that do well in the next leg and hopefully the final leg of this bear market. Now, one of the things that's been helpful is people are bailing out of bonds. Well, why are they bailing out of bonds? Well, the yields suck. The yields have dropped 0.5% depending on where you are in the yield curve. So I'd rather have my money in a Dow stock earning 3 or 4% than in a bond yielding 2%. Apparently, the market is willing to take the extra risk of owning a stock. Whoa, that's why we have our risk indicator. Our risk indicator is telling us that they want more risk. Now, why didn't the market do as well as it could? I mean, we've got more risk. We've got cash flowing in out of the bond market. That's why we're rallying, and that's why we're focusing on the NASDAQ stocks. But I think it's coming to an end. I was going to say, global shares are just like those risky NASDAQ stocks. Why? And in a way, that's true because this is dominated by Europe and Japan. They're worse off than the U.S. So when the next leg of the bear market comes, I'm going to probably want to focus on selling foreign shares more than U.S. shares. We got down to zero, okay? So now there's no question we're going to have a recession. This indicator has never failed since World War II. We've hammered on that before. I don't need to tell too. So here's the bonds. You can see on Friday they took a dive. Purple predictor took a dive. Is the rally in bonds over? Let's take a look at our key indicators. Let's break these down. We haven't done this for a while. Right here you can see this is the price of gold in a bear market. That tells us that interest rates should come down. Yet the previous chart, remember, interest rates coming down means that bonds go up. So bonds go up, yields go down. So gold is saying, except for the last week or so, that yield should come down, bonds should go up. It's kind of hard to see back there, but that's the CRB index up there. It's also coming down, although it was also up in the last week. So it's saying interest rates should come down, but the last week is a bit bullish. And then the final indicator is this blue line. That's 10-year yields in Germany. Same pattern. All three of our indicators here were saying lower interest rates until last week, and then they all said, you know what, changed our mind, higher interest rates. So what did the bonds do? They broke late in the week. Dollar. Now, if the bonds are going down, that means higher interest rates, which means strong dollar. And that's exactly what's happening. So I've been kind of bearish on the dollar recently, but I guess we got to get a little bit more bullish here. I don't have a position, but I guess I'd be bullish if I had to be bullish. Now that means then that gold is going to break down. Fully paid up members, you hold on. Just keep that in mind when we get into the fully paid up section, because there's some really interesting action there in our indicators. So we had a really nice gap up here in gold, but we broke above this trend line. No big deal. We haven't broken above any significant highs. They're up here at 1880. Thought we might get a rally up there. Now, with the dollar being strong, I just don't see it. I think we're going to probably see a gold sell off over the near term. Our indicators are actually one bullish, two neutral. So that's actually not bad. But fully paid up members, of course, have access to another very powerful indicator. And just and freebies, just to let you know, it's bearish. Crude oil broke down, as we've been telling you. I believe the crude oil is going to go down. Nat gas might stay up, but the rest of the energy complex is going to break down. As we go into the recession, we're going to see demand for crude oil evaporate. And supply has been tight. That's why we stayed up through all this period. Supply's got to start increasing, okay? It's got to start increasing, but mainly it's going to be demand is going to be collapsing here. The price is already. Bitcoin, wow, we had this stupid bull market. Why do I call it stupid? Because it's so weak. I mean, we're making higher highs and higher lows, so by definition, it's a bull market. But then look at the purple predictor collapsing. So how do I get long this stuff? I can't get long this stuff. Can I get short? Not really. But the purple predictor is telling me to be short, but the trend is telling me to be long. Well, I always have to bias it in favor of the trend, but this is telling me that this trend, this super weak bull market, is probably going to collapse. Now, the other thing here with Bitcoin is now like 100% correlated with the NASDAQ. But the NASDAQ is way stronger than Bitcoin. So if there's a piece of bullish news like strong NASDAQ, that should be dragging the price of Bitcoin up, but Bitcoin's barely making it. That means the next time we move into a bear market in the NASDAQ, crypto is going to collapse. So this is another area that I'm looking at getting short. Once the new leg in the bear market starts, foreign shares, Bitcoin, these are places that I'm going to focus my short positions on. Okay, freebies, you know what you need to do. Come on now. Subscribe and start making some money. Don't just sit here and pretend. I mean, this is great information I'm giving you for free. That's great, and I'm happy to do it. But really, you need to be making money, and the way you do that is subscribing. So go here, sign up. You're going to love it. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody, we'll see you later.